Becoming a millionaire comes down to only 3 steps. Number 1, you got to earn money. Number 2, you got to spend less money than what you bring in. And number 3, you got to take the money that you didn't spend and use this money to make you more money. Once you understand that, now you can dive a little bit deeper. Number 1, how can you earn more money? Second, how do you spend less money strategically? And third, how do you grow your money so your money can now make you even more money? I messed up my ankle recently when I was skiing in Salt Lake City, which is why for the last couple of weeks I've been sitting down and making my videos. Now I'm feeling a little bit better, which is why I'm standing up and doing this. But when I messed up my ankle, I had to go see the doctor. And this was the first time I went to a hospital because something was wrong with me for the first time in a long time. And what really hit me during this time when I was seeing the orthopedic doctors was why Indian people really want their kids to be doctors. Because when you become a doctor, if you study hard in school, you get good grades, you get into medical school, and you do all the right things, now you essentially become the CEO as the doctor. Because now everybody reports to you. The nurses report to you, the PAs report to you, the technicians report to you. Everybody in the hospital system, minus the administrators and the owners of the hospital, everybody works for you. So it's almost like a guaranteed path to being a CEO as a doctor, and you can make close to a CEO salary as a doctor, and all you have to do is study, study, study really hard, get good grades, and work your butt off for a decade and a half, and now you can become a doctor. Outside of the medical field, if you want to become a CEO, it's much less certain because you can't just follow some strategic path to become a CEO. You're going to have to do a lot of other things that are not in a textbook in order to do that. And this is where option 1 to earn more money is to earn more money from your job. Maybe this means getting a career change. Maybe this means trying to work up your corporate ladder, trying to get a better position. Maybe this means getting a promotion. Maybe this means getting a bonus. Maybe this means starting a second job, doing whatever you got to do through your job or another job to earn more money. Now, if you're one of those people that says, I don't want a boss, I want to do something on my own, I want to create something, I want to build something, great. Now you can go out and try to start a business. Entrepreneurship is very hard, but it is very accessible. The internet has made entrepreneurship more accessible than ever before. Now just because it's accessible does not mean it's easy, but the whole idea behind entrepreneurship is you create something and you sell it to somebody else and you make money for doing that. Now even if you don't sell your thing, you can make money by having somebody pay you for exposure. For example, in my newsletter company, Briefs Media, we don't actually sell a product to our readers. What we do is we sell advertisements to businesses. So now businesses pay us for exposure in our newsletter. So you don't always have to sell a product, but you have to have some product as an entrepreneur. You come up with a product idea, and now you have to give it into the hands of your customers, your consumers, your buyers, and you have to make money for doing that. If you can make more money than what it costs to do it, now you have the potential to build a business. Once you make your first dollar, now it's all about scaling it. How do you make a second, a third, a 10th, a 100th, a millionth? And this is where understanding that you as the entrepreneur, there's no limit to how much you can make, but there is a limit to how much you can make through your job. There's going to be a limit to your pay raise. There's going to be a limit to how high you can climb the corporate ladder. Sure, you might make it to the CEO, but still the CEO is working for the owners. The owners are, well, we'll get this here, owners are people that own the business, but now when you're working in the business, you can understand that either you can work in the business for a salary through your job, or you can work to create the business. Now, if you do have a business idea and you want to protect it, you can check out my law firm, Buzz Legal, where my team works to protect business ideas, whether it's through copyrights, patents, or trademarks. The reason why this is so important is because America is the most litigious country in the world. And when I started Minority Mindset, I filed a trademark on the name Minority Mindset. And somebody still tried to sue me because they claimed that I was using their name, but I was luckily protected because I had the trademark. So if you do have a business idea and you want to be referred to an attorney that can help you protect your idea, or you just want to see what type of protection you need, you can check out Buzz Legal, and I'll also put the link down in the description below. The last thing that I want to mention about this, especially when it comes to earning money on the internet, is that in this day and age, the internet and business is all about attention. The more attention that you can gather, the more money that you will make. When I first started my first real internet business, I had some other side hustles on the internet, but my first internet real business was a sock company that I created. And the way that I marketed my sock company wasn't by running advertisements. It wasn't by doing all this fancy stuff. We just built an Instagram page, and I worked to put out good content on Instagram. We worked to create good content, and we kept publishing this. That way we could build our subscribers on Instagram, and And then we would sell our Instagram subscribers our socks. We would also tell our Instagram subscribers that they can join our email list. That way they could be notified when a discount happens. Well, when I launched the sock company, the only marketing promotions that I had were my Instagram page and the email contacts that we got from my Instagram page. And this Instagram following allowed us to generate over $20,000 worth of sales in the first 30 days alone. Where did we get these customers? From Instagram. Why did they follow my Instagram? Because we were able to capture their attention. How do we capture their attention? With good content. And so understanding that now on the internet, whether you're selling your own content, whether you're selling a product, it doesn't matter what the product is. If you can capture somebody's attention, you can then capture the dollars. So now you're working to earn more money. And the simplest hack to become wealthier sooner is that when you get an increase in your income, don't increase your lifestyle. This is what happens to so many people is as soon as you get a raise, you get a bonus, you get a promotion, what ends up happening for so many people is now, boom, you bump up your expenses as well. You got to get a new car to celebrate. You got to go on a vacation to celebrate. You got to go out and do things to celebrate this new income that you have. Now, all of a sudden, you make more money, but your expenses went up just with your income. So now you're not any more wealthier. The quickest and easiest way to become wealthier sooner is when you inflate your income, don't inflate your lifestyle. When I started making more money, well, everybody else around me was spending money on vacations. They were going out and partying. They were going out and drinking. They were going out to nice restaurants. They were going out and blowing money. The place where I was spending my money was either in my own business or by buying real estate, rental properties. I looked broke because I didn't have the nice stuff. I wasn't buying the nice clothes. I wasn't going out to eat. I wasn't going on vacations. The only time I went on a vacation was if I was getting paid to go on a vacation, because I used to work in the event planning business. I used to work in the wedding business. I didn't travel unless somebody was paying me to go to their wedding to work there. I didn't spend money on anything unless it was paying me, while everybody else was spending money on all this nice stuff, living their lives in their 20s, while all I was doing was building my businesses and buying real estate. If you want to become wealthy sooner rather than later, you got to get rid of the car. You got to wait on the car, you got to wait on the watch, you got to wait on the nice home, you got to wait on the travel, you got to wait on the nice clothes. Put that stuff on hold. Take that money that you would have spent on the BMW, take that money that you would have spent on your Rolex, take that money that you would have spent on the nice apartment, take the money that you would have spent on the Gucci, take that money now and use it to buy more assets. Take that money and use it to go build your business. Take that money and go and save it. Take that money and go and pay off your debt. Take that money and use it to make yourself rich before you make everybody else around you rich. Because when you take that money and you give it to Gucci, you give it to Amazon, you give it to Apple, you give it to Bahamas, you give it to wherever, that money is gone. Somebody else is getting rich because of your earnings. But you got to work on building your own richness first. And it's hard because when you're in your 20s, when you're in your 30s, everybody's living it up. You're making a decent salary and you want to show it off. You want to have a nice car. You want to go on the parties. You want to go on the bachelor parties. You want to go to the bachelorette parties. You want to do all these nice things which keep costing money. But you got to figure out what's most important to you right now. Do you want to go and have the fun, or do you want to build the wealth? You got to make a sacrifice somewhere. And if you really want to build the wealth, you're going to have to say no to some of the spending. That way you have more money to invest in your assets. Now you're working to increase your income while you're not spending as much money, so you have a bigger cushion. You have more extra cash left over. Now the question is, where do you put this money? That way it can actually pay you. Because if you leave this cash in the bank, like what most of our parents told us to do, that cash isn't doing anything. In fact, that cash is actually losing value because of inflation. If inflation is higher than the interest rate that you're getting in the bank, then your savings are slowly losing value and your savings are making you poorer each and every day. So where do you put this money? Well, you can either actively invest this money or you can passively invest this money. This means you want to put your money into this thing that's going to pay you for owning it. And I remember the first time I learned about this concept, it made no sense to me. Because growing up, I never learned about investing. I never learned about financial education. I was told to go to school, get good grades, become a doctor, and then save a lot of money. Why? Because if I have a big bank account, I'll be rich. But the problem is, if I have $1 million in my bank account, I might feel rich. But if my expenses are $100,000 a year, I'm only rich for 10 years. Because then the $1 million is going to be depleted. But if I have a machine that's paying me $100,000 a year without me having to go to work, now I'm wealthy forever. It's a completely different mindset. And now the question is, what can you buy that's going to pay you each and every month? Or what can you buy that's going to pay you each and every year? Or what can you buy that's going to go up in value? Because most of the times when we think about buying something, we think about buying a car. Now you buy this $50,000 car, you finance it with hopefully low interest rates, which I don't recommend you do, but you finance it with these hopefully low interest rates, and then your whole goal is, let me sell this car for as many dollars as I can. And now you try to sell it for $30,000 5 years later, but you still lost money in the process. See, when I buy a car, I don't care what the resale value is. I don't buy a car thinking about the resale value. I don't buy a car thinking, how much am I gonna get for this car later on? All I care about is, do I like the car or not? Because I know the car is a liability. I don't try to make an asset out of a liability. So now when I try to invest my money, I'm only looking for real assets. Ideally something that's gonna pay me with cash flow, but if it's not gonna pay me with cash flow, something that I know or I believe will go up in value. So what does this mean? Well, on the active side, this could be a business. This could be a franchise. This could be a business that you buy outright. This could be a way for you to buy your own job, so this way you don't have to report to somebody else, but you also get your share of the profits. Now, this is not something that really most entrepreneurs would do, because as an entrepreneur, you're gonna wanna create your own company. However, if you don't feel like you wanna start your own company, if you don't know how, if that's too risky, but you don't wanna work for somebody else, the next best thing will be for you to go out and actually buy a company. And this could be a franchise or a non-franchise, where now you come in, you take the ownership, maybe you're gonna be working there and you get your salary for working there, but you should also get your share of the profits now, because you're going to own the business. Now, for those of you who are entrepreneurs, if you want to stay up to date on what's happening with the latest business trends and innovation trends, you can join Business Briefs. Business Briefs is my free newsletter for entrepreneurs to keep you up to date on what's happening in the business world. That way you can spend your time running your business, not thinking about what's happening in the business world. If you want to join Business Briefs, it's completely free, and I got that link for you also down in the description below. On the more passive side of investments, you can invest your money into stocks, you can invest your money into real estate, you can invest your money into startups, you could potentially invest some money into cryptocurrency. These passive investments, although they might not be completely passive on your end, the reason why I call them passive, it's where you don't have to go out and actually operate the investment. If you go out and invest your money into stocks, real estate, startups, or maybe even cryptocurrency, now what you're doing is you're putting your money into some other asset where either it's going to pay you with cash flow, or you're hoping for appreciation. You're hoping to see the price of your investment go up. So if you invest your money into stocks, a dividend-paying stock, or you invest your money into real estate, it's going to take time on your end to find the right deal, put the deal together, and then actually invest in it. But once you own the deal, now you can make it more passive on your end, because when you invest in a stock, well, you don't have to actually go and manage it. If you go and buy some of the Amazon stock, you have the CEO of Amazon who is running the company, and then you have all the employees at Amazon that are actually making it work. When you invest in real estate, you don't want to manage it yourself, because now you're becoming a real estate manager. As a real estate investor, you want to hand over the keys to a management company or a property manager. That way they can handle the day-to-day work, and you can focus on the investment side, building deals, finding deals, and actually putting together the deals instead of managing the property, the day-to-day work. So this is where these are the passive investments, which do take time on your end, but you don't have to actually operate the investments. The simple math is the more money you put here, the wealthier you will become. If you can get a 10% return on your money, and you put your money into any one of these passive investments, and you're investing $100 a month, it's going to take you 46 years to become a millionaire. If you can invest $500 a month with the same 10% a year, now it's going to take you 30 years to become a millionaire. And if you can invest $1,000 a month with the same 10% return, now it's only going to take you 23 years to become a millionaire. And these numbers are assuming that you're investing your money into a passive investment. If you put your money into a more active investment, something like a franchise or a business or your own business idea, now you can grow your money at an even faster rate of return, but it's going to take more time on your part. So if your goal is to become a millionaire, it comes down to 3 steps. First, you got to figure out how you're going to earn more money. Then you got to figure out how you can spend less money of what you're earning. Then you take the money that you're not spending, and you want to take this money and put it to work. That way it can earn you more money. If you can figure out the answers to these 3 questions, you will become a millionaire. And now it's just a matter of time. You do the math. How fast can you grow your money, which is how fast you'll become a millionaire. It feels like everywhere you look, you hear people talking about how ChatGPT is going to change the internet, and how artificial intelligence is going to change the economy, and how AI is going to change the world. In the last few decades, there's only been a handful of entities that have really changed the way that we operate in the world. Google changed the world because it changed how we accessed information.